Hello everyone, this is Etv Special Edition and I'm Untitled with this edition. And Ethiopia is on the way to launch Ethiopian Securities Exchange. And this Securities Exchange can help the business community access to finance and also boost up the country's economy among other factors. And this edition will focus on the preparations made by the Ethiopian government, the finance sector and other actors in this Securities Exchange launching. And the benefit is also expected from this Securities Exchange. And I'm joined here in the studio by Asafa Sumoro from the National Bank of Ethiopia and Jonas Stefanos from IPAS Consultancy and Training. Thank you for joining me and stay with us, and a very warm welcome to you, Jonas and Asafa. Okay, so let's start our discussion with the security exchange market history of Ethiopia. Ethiopia just launched or started the move in 1965 by setting a share trading group as a department in the state-owned bank DANE, and it was dissolved in 1974. So do you think that the current move will have a robust base and that it won't face the same fate?
Okay.
Let me start from you.
Okay, thank you. Yes, as you've said, Ethiopia had capital market activity in the 1960s, late 1950s and also 1960s. That pioneering stock market activity was was very good in terms of the inception and then also the activities that were conducted during then. However, those activities, the pioneering activities that we saw in the 1950s, 60s were aborted in the 1970s. So the current capital market activity, I believe, is quite different in many ways. One, the current government had strong interest to develop the financial markets, Ethiopia's financial market. If you can remember, in the late 2080s and 2018, the government launched a homegrown economic reform program. That economic reform program has three pillars: macroeconomic reform, structural reforms, and also sectoral reforms. Within the macroeconomic reform, access to finance is an important component of that reform program. So the government is committed to develop a financial market. Capital market is an important part of that. So in order to promote access to finance, so one, it has a policy backing, and then also the commitment of the government, the political will. And also, as part of that, the government has taken significant step in terms of developing the market. So over the past 2 years, we've been working on, the National Bank of Ethiopia has got the mandate to develop the market by the guidance given by the government. So as part of that mandate, the National Bank of Ethiopia has been working to develop the legal and regulatory framework for the development of this market. So one of the setbacks of the earlier attempt was there wasn't any strong legal and regulatory framework. So there were some legal instruments in the 1960s. The commercial code was there. Also some proclamations relating to government securities were there, but it wasn't designed in a way that would sustain the development of the market. So the policy backing, the political will, the government support, and also the foundation that we are creating, the legal and regulatory framework, would put this project in a very strong footing so that it can sustain in the future. So in that way, it is much different.
Okay. So would you add this some, please?
Yeah, I think the dissolution of the capital market back in 1974 was basically not an inherent problem of the stock market itself, but there was a change in political ideology. So all of those companies that were listed in the stock exchange were nationalized. So there was no need actually for private capital or to pull funds from wide array of investors. So it's not really per se the problem of the capital market, but it was a change in political ideology. But even after the fall of the Derg and a change in the command economy to a more liberalized kind of economy, there was a sort of ambivalence to establishing or re-establishing the capital market. Maybe scholars might say there was a lack of legal and regulatory framework and strong institutions within that framework itself. So I think in the current situation, as Tawassaf alluded to, there is a lot of progress that being made in terms of having a regulatory framework, a legal framework. There is an authority being established. The other issue that was being raised was whether we have the human capital to run such an initiative. That also is changing now, because there are lots of efforts to bring critical mass of professionals or specialists that will be serving in that stock market or stock exchange ecosystem. So having this on the ground will be really beneficial to have a very efficient and strong and working capital market in the country.
Well, that's good. So establishing a stock market has been just a hard issue under discussion in Ethiopia for the past 10 years particularly. And some argued that, they disagree, mentioning the establishment of the stock market, mentioning the immature financial reporting and fragile corporate governance system in absence of the required legal framework and very weak private sector. And others also propose the quick launching of these because it may just be possible for accessing a large amount of finance for the private sector, for business people in general in the country, and also just for boosting up the economy. So what's your your perception on the current urgency for Ethiopia to launching the stock market sooner?
Okay, I think as has been said earlier, the government is taking so many initiatives to reform and liberalize the economy. So this shows you that when there is a liberal economy, there will be a large a requirement for large amount of funds to run that privatized or liberalized economy. So where are we going to pull the funds? Obviously, it sounds very urgent to go with the reforms to have access to capital from a wider pool instead of, for instance, focusing on only financial intermediaries such as banks and insurance. So the fact that there's this reform shows you that it's really urgent to have the capital market going together with the reforms that are being taken by the government. The other thing is, from the private sector point of view, especially, there is a younger generation now who is that's innovative and entrepreneur. So this generation, they have the idea, but they are constrained by financial resources, obviously. So the one option that they have is again using financial intermediaries such as banks, which will be requiring obviously a collateral that these younger innovative entrepreneurs don't have.
Yeah.
So it will be really a good platform for this generation to have a source of funding where they can raise funds from the wider public instead of going to smaller number of financial institutions. So I feel these two are really making it urgent to have it as soon as possible.
Okay, so that's good.
Yeah.
Safa?
Okay, yeah. I think when we look at capital market development in the historical context, earlier we said we had some activities in the 1960s. So from 1960s today is more than 60 years. So had we had that market, evolving over the past 60 years, today, we're in a position, in a different position. The subject that we could discuss today would have been much different. So compared to what our the fathers have done, we are, that urgency in terms of, we need to develop. But when we launch this securities exchange or capital market, it's not an overnight process. So it's a process that we wanted to do it now, and then not only for today, but for the next 100 years. So there are quite a lot of things that we have to work on. I mean, everything wouldn't happen like overnight, but in terms of like the, you know, the historical context that I said, you know, we are like 60 years, you know, behind our fathers. And then also now, today, the economy, Ethiopian economy has grown so much. You know, the size of the economy is very big. You know, the size of, you know, the financing need is very big. You know, most business companies, you know, when we have, you know, when surveys were conducted, what is the major, you know, bottleneck for investment? So the top three factors are access to finance, you know, foreign exchange, and then institutional problems. So access to finance, in every survey, it comes at the top of, you know, the list of, you know, investment companies, you know, firms that they say it is a problem. So financing is provided through banks, mainly by banks, but, you know, some form of financing could come from families, friends, and, you know, other you know, financing sources. So, but long-term finance, we do not have a platform, you know, to provide the long-term finance. So capital market is one of the most efficient and then also you know, tested you know, source of long-term finance in any other market. So in that regard, in order to fill this gap, the financing gap that private, you know, sector faces, even the government, you know, government capital market is both, it's good both for the public sector and then also the private sector. Even government, you know, can also actively participate in the capital market by issuing bonds. So that urgency comes from this, you know, the need to finance longer-term investment. We have, for example, from the government side, we have a very, you know, ambitious plan of, you know, making Ethiopia, you know, a prosperous country. So prosperity needs finance. You have to, you need to have like those sorts of finance in order to finance our infrastructure, in order to finance our, you know, roads, you know, electricity project. All these, they need long-term finance. So the government doesn't have to rely on existing sources. You know, we have to diversify sources of finance. So in that sense, I think there is an urgent need to develop this market. As I said, this market is not going to be developed overnight. It's a process, so we have to start it so that we can, you know, build on what we have today and then, you know, continuously develop it.
Okay. Well, so in line with this, just can we just bring some experiences of African countries that have just relatively similar economic status with Ethiopia and benefited from their stock markets?
I think our neighbor Kenya could be an example. Of course, our size, I mean, the size of Ethiopian economy is very big compared to Kenya, but, you know, it's within like the stage of, you know, development, you know, it's a comparable country that we would say they have benefited. I mean, most African, you know, capital market or stock market may not be the best examples, you know, to see, to take them as a benchmark, but, you know, in the stage, you know, the capital market, you know, having an efficient and well-functioning capital market is the ideal goal. But at every stage of development, there is a contribution that capital market development would make to the economy. As I said, long-term finance can only come, mainly comes through the intermediation activities of capital markets. So Kenya, Morocco, Nigeria, Egypt, you know, those countries, South Africa, of course, some of these countries could be, you know, bigger in terms of size, but Ethiopia could compare with the size of population, you know, the size of companies that we have. These are comparable countries who are currently benefiting, you know, the from stock market activity. As I said, you know, the full potential of capital market may not have been utilized in these countries, but at every single stage, there is that sources of long-term finance that comes through capital market intermediation. So in that sense, I think there is a good example in Africa.
Anas?
Yeah, I think that's the last point is that I want to emphasize, because a capital market can serve many things, but if anything fails, at least we can provide a source of capital for investment needs. So in terms of that, I think we can achieve what the capital market, even though it's not an ideal capital market, we can achieve part of what the capital market can do in generating capital, long-term capital. When you look at banks, for instance, they would provide you capital for a short period of time. But a long-term capital could be generated through sale of securities or, for instance, stocks. So when you buy a stock, you're not going to be expected to receive or to recoup what you have invested in a very short period of time. You're there for a long haul. So that will give a sense of security for the investor that they have funds and it's for the long term. Not just only individual investors or private investors, the government as well can raise funds through the capital market, through issuance of bond as well, which is currently doing. But in the long term, when there is a very structured market, this will be much more prominent, like raising capital from the wider community will be the greatest advantage if anything fails at least.
Let's just try to see the preparation is that the government side has made so far so that we can have, the country can have effective or successful launching of this security exchange market, legal, institutional, like preparation is.
Yeah. As I said earlier, I think the government is making significant progress in terms of developing this market. So the foundation is, the homegrown economic reform program, establishing a functioning financial market. As part of that, the steps that the government has taken so far is one, through the technical team at the National Bank of Ethiopia, legal and regulatory framework. The legal foundation was established by the Capital Market Proclamation that was enacted in June 2021. So following that enactment, then the next step is basically establishing key institutions. The regulator, the Capital Market Authority is one of the most important institutions, and then the Security Exchange, another institution that we needed within the capital market ecosystem. And then also there is a central securities depositories where securities will be kept centrally in an electronic form. So also there are other institutions that are planned to be instituted as part of this institutional setup. Then also the legal additional legal instrument like directives. The proclamation only provides general principles for the functioning of this market. But within the proclamation, in order to operationalize this proclamation, we needed to develop subsidiary legislation, various directives in the form of licensing, for example, licensing an exchange itself, licensing capital market service providers, directive on public offer, the issuance and trading of securities, directives on compensation fund, directives on acquisition and protection of minority interests. There are quite a lot of directives. So in order to do that, what the National Bank of Ethiopia currently doing is we have 3 projects currently running on in order to develop this market. The first one is the Capital Market Project Implementation Team. It's a project that is overseen by the National Bank of Ethiopia. So this team is working towards establishing the regulator, the Capital Market Authority. So all these directives, the one that I just mentioned, are currently underway. We have drafted the first draft of most of these directives as part of this project. The second project is also the establishment of the Ethiopian Security Exchange. There is a separate project office that is recently formed. That project is led by the Ethiopian Investment Holding. The exchange project is currently led by the Ethiopian Investment Holdings. It's a government sovereign wealth fund, which will basically work with the private sector to form public-private partnership as part of the setting up of the exchange. So that project work is also currently going on. So what the exchange project office would do is basically establish the exchange itself as a share company by partnering with domestic and foreign investors, and then also look at the design of the exchange. Although the preliminary exchange design work has been done by the capital market team within the National Bank, now the exchange project will work on that to develop the exchange design. The design, what type of exchange do Ethiopia need? How many market segments? Which market segment is, for which product? So the business plan for the exchange. All this would be conducted by the project office. The third project that the National Bank of Ethiopia currently working on is establishing central securities depository. This is a very critical infrastructure that could host the securities in an electronic form. So all existing shares, for example, existing government securities, they will be dematerialized, they will be changed, converted into electronic form, and then kept in that central security depository. Because the issuance and trading of securities can be facilitated by this central securities depository. So there are quite a lot of things currently, underway. So all this, in addition to these are the infrastructure, the institutions, but in addition to this, we are also developing the capacity of the ecosystem, creating an ecosystem that can support the development of the market. So for this, we are providing trainings for potential, intermediaries, potential investors, participants in the market. Also, we are providing trainings for key institutions like banks, insurance companies, and potential companies who can be listed in the future. We partnered recently with the Standard Bank of South Africa to provide trainings for these potential companies. So there is quite a lot of work to be done, but we are also, trying to develop the capacity of the ecosystem in order to, develop a well-functioning capital market in Ethiopia. So there is quite a lot of things currently underway.
Well, Jonas, you have been just talking with some sort of inspiration, huge inspiration on the launching or the start of this stock market. So you have just your own firm, and do you think that you are going to benefit from this? And also, if you are thinking so, have you been just engaged in such themes like consulting some firms, businesses to prepare themselves, and what is the preparation like?
But before that, just to add on what Tosafo was discussing earlier, within that ecosystem there is a player which is not within the Ethiopian Capital Market Authority, but still a significant player, which is the financial reporting part, which is usually mentioned in the past because of lack of transparent financial reporting and quality financial information. There was doubt that whether the capital market really will function as it's supposed to. So to overcome that, there was a financial reporting proclamation that was passed, and it's been in effect for the past 5-6 years, which is requiring an international standard in the preparation of financial reports. So companies are required to use international financial reporting standards in the preparation of their financial statements, which will help in bringing transparency and fairness to the financial information provided to the market. In addition to that, the quality of that financial information is dependent on the quality of the audit work as well. So again, that same proclamation requires auditing to be conducted using international standards. So we're moving towards that. So it's not just only having international standards to prepare reports and then bring quality to the kind of information that's going to be consumed by the market participants, but also there is a regulatory body to ensure that the quality is maintained. There is a body established called Accounting and Audit Board of Ethiopia, which will oversee whether these international standards are implemented as they're supposed to. So these key players that bring information to the market are really changing. So we feel like there's a good input to a well-functioning capital market. When I get back to your question, yeah, I do consultancy works. So I have a chance to meet with different investors. So the thing I notice is that there's no clarity as to what the capital market brings to them. So that's where we have to intervene as consultants, obviously. Because when you see a capital market, you might see the benefits, but as well there are some challenges.
Yeah, we must just talk about the benefits next.
Okay.
Right next, but just tell me, just the preparation is companies like firms like you and just other private sector companies have made, and they should also make.
Yeah, in terms of my company and then some of the clients in my company, it's just about, first of all, getting their house in order in terms of their reporting, in terms of having a very good corporate governance. I think there might be a code to be developed. I don't know whether it's the Capital Market Authority or another authority who's going to develop a code of corporate governance. There should be a code, but we are telling companies that when we get into the capital market, will be in the public eye, obviously. So for that, you have to get ready in terms of producing quality reports, in terms of having a very good corporate governance, and then be ready what the capital market requires for listing. So that's what we are advising our clients. Mm-hmm. That's what they are getting ready. But the specific issues of listing, what are the requirements to get listed, what are the specific benefits for listing, is something that will go along with some of the directives that the national bank, the capital market team, and as well as the authority will be developing in the future. We'll see that, and then our clients will get ready in that regard.
So my next question for you is just the significance this stock exchange or security exchange can bring to the country's business community, to the country, and also the economy of the country.
Just to focus on the business side,
okay.
We'll go to the benefit that it brings to the economy and the country as in general. But to businesses, we've been saying earlier that the major advantage is access to long-term capital. That's what it brings to businesses. So it's a long-term capital. So using that long-term capital, you can produce goods and services, and then you can get the return that you want. But the other thing is, for companies that are operating as, for instance, as a family-owned businesses, when they go to a capital market, when they go for listing, in addition to raising capital that they need to consolidate their business or grow their business further, it will be an advantage for earlier investors to cash out. So the investor that has been running the company by, family-owned business could be, it can cash out with the capital market by issuing shares. It can sell shares and then gets a return from the investment. Another advantage is, as I've said earlier, you can be in the public eye. So that's an advantage, because they will get more publicity. You will get easily products can be delivered to the market as you're in the public eye. You're a good company, because when there is a listing, obviously the listing requirements will be a bit strong. So that will make companies be really good in the eyes of the public, and then offer their products to the market, and then have a competitive advantage in that manner.
So there could also be just a very good finance source for entrepreneurs, and also for those graduates that have been looking for jobs.
Mm-hmm. Yes, if you have a business idea, the limitations nowadays is to get the funding, obviously. So I'm not saying that these young entrepreneurs will go straight to the market and raise funds, obviously. That may not be as simple as it sounds, but there will be opportunity in the market. If you have a very good business idea, and then if you have been in operation for, let's say, a year or a couple of years, and then your business idea is robust, then it's easy for you to get access to long-term capital from the stock exchange or from the wider capital market. So they won't be inhibited by lack of capital, because your source will not be a very limited group of investors, but a wider community. So that will be an advantage for these entrepreneurs, for this young generation who have ideas but don't have the financial resources to get their ideas going. Okay. So that will be an advantage.
Well, that's good. Mm-hmm. So, Tosafa, can you just tell us what benefit is this stock market can bring to the country's economy?
Okay, yeah. In terms of benefit to the economy, some of these benefits Jonas has already mentioned. But for example, when we look at the financial sector itself, the capital market development would support the development of the financial market itself. It deepens the financial sector. The banking, currently financial sector is heavily dominated by banks and insurance companies. So when we have capital market, then sources of finance could come from this capital market. new forms of finance and new forms of financial intermediation comes into the financial sector. So that would create two things. One, it competes with the existing financial sector, with the bank, especially the banks, and then also this competition would help banks to become very innovative, improving their services, improving their technology, improving their capacity. So that's a positive contribution. The other thing, it also provides opportunities for banks. For example, all these banks currently mainly focused on lending, retail banking. So when capital market becomes operational, new forms of like investment banking, these activities can be also done by banks, fund management, asset management, custodian services. Capital market brings a number of business opportunity for the banking sector itself. So in that way, the financial sector becomes, it develops further. The other benefit that it brings is just to add on what Jonas was saying, it promotes innovation. Innovative ideas, normally they could tend to be, initially they could look risky, they also need some long-term time frame. So banks normally, they only lend money to short-term horizon, to those investment ideas or investment projects that are only short-term, 1 to 2, 3 years. But long-term projects, they need long-term finance. So these innovative ideas, these innovative projects, they get additional sources of funding from the capital market. Like every single idea, just immediately it may not go to public, but there is a ladder of funding. It may start from angel investors, private investors. As they gradually develop, they can also access the capital market. Capital market also helps investors to diversify their portfolio. Currently, the investment opportunities are just either you save it at a bank or just buy piece of land or develop property. But when capital market comes in, quite a lot of products would be available. Investors would have the opportunity to invest in shares, they invest in bonds, corporate, government bond, and other capital market product which will be introduced as the market develops. So portfolio diversification is an important benefit for investors. Government could also benefit significantly. Monetary policy, fiscal policy management would improve because when capital market develops, the government securities in the form of treasury bill and government bond with different maturities can be issued and traded. So the central bank will have monetary policy instrument, to use, so that the use of monetary policy by the central bank and then also public debt management by the Ministry of Finance can also improve. So it improves both monetary policy, fiscal policy management, and monetary policy transmissions of the economy. So it's quite a lot of benefit there. Also, capital markets also attracts foreign capital. So foreign capital, the government does not have to rely on foreign borrowing all the time, or domestically, but foreign capital would bring additional source of finance to the economy because capital market, domestic firms, domestic economic activity, would get visibility, international capital will flow. So that's a critical, important benefit that the capital market. So there is quite a lot of things that we can talk about capital market, but these are some of the benefits that we can enjoy by having a well-functioning capital market in Ethiopia.
Well, that's nice. Is there anything that you'd like to add, or
it can also benefit individuals just like you and me also, just ordinary citizens, because it will help in creating wealth in the form of dividends as well as capital appreciation. Nowadays, for instance, if you want to buy a share from a company, like a bank, for instance, those are the financial, those are the companies that are offering shares for the time being. So you need probably a large amount of money to invest in the share, and then it's not liquid, because if you want to sell the share probably the next day or the day after or week after, it's not easy for you to get a buyer, because there's no organized place where investors can trade among themselves.
Okay.
So having that stock exchange will create a platform for individuals just like you and me as individual investors to get that liquidity, to invest even a small amount of money and then get a return from that amount. So there's always this saving and investing conundrum. So especially in times of inflationary periods, saving is not keeping pace with the inflation. But investing is likely to keep pace because you're getting a return in the form of dividends and capital appreciation. So it's likely that it will keep pace with inflation. So it will be really advantageous to individuals to invest in different investment products.
Okay. Well, that's really a very nice point. So we have already just mentioned about the opportunities. Both of you have mentioned about a lot of opportunities, benefits, and the conducive environment is on the launching of this stock market. Now let's just make clear to those involved in the this issue about the challenges the launching of Ethiopian stock market might face.
Of course, yeah, capital markets, we have, discussed benefits, but, there are also challenges to, developing this market, especially, we are starting from scratch, let alone, countries that starting from scratch, even existing markets in other, in Africa, and then also developed countries, there is that challenge of developing the market, in a sustainable way. So some of the challenges for us, especially for Ethiopia, could be, it comes from different angles. For example, from the supply side, when you develop the market, you need to have, a constant supply of securities. Constant supply. We need to have large pool of issuers who come to the market and issue a security. So with currently, of course, banks, insurance companies, and other companies have, raised capital by way of issuing shares. But when it comes to capital market, there is like a framework that, these issuers would come into the market and then issue. So that is, having quality and large number of issuers could be a challenge. Also, from issuer side, from the demand, from the demand side, we need to have a demand for these securities. Demand for these securities could come from retail investors like you and me, or it could come from institutional investors. So in that case, from the demand side, we need to have educated public who see the benefits of investing in capital market. That level of demand can also be a challenge. Institutional investors, although they may be interested in investing in capital market, there could be some regulations that could impede or prevent them to actively participate in this market. So those are the kind of challenges that you see. From the macroeconomic point of view, we need to have a stable macroeconomic environment, inflation, exchange rate. So this kind of instability would create some challenges to developing this market. But as I said earlier, capital market is a market that we develop for long term. So currently, for example, we have some inflation. So this is not a deterrent because inflation could also improve. So as long as we identify, we see stable macroeconomic environment is an important factor, then for this challenge, government is, has launched already an economic program, structured reform programs, to correct, inflation, other macroeconomic imbalances. So the challenges are attached, they also bring opportunities, and then also there are remedies for all these challenges. So I would say overall, these are some of the challenges that we could face in developing this market. Also, there are infrastructure related challenges. We need to develop infrastructure in the market, like the exchange that I said earlier, the CSCD already identified, and then we are working towards establishing the infrastructure, the trading system, the clearing and settlement system. Already the project is underway. So challenges were identified, and then we are also addressing them. Maybe Jonas could also add.
I think most of the challenges have been raised by Safa, but one thing that I would like to raise is the aspect with regard to human capital, because that's a critical element as well in the ecosystem, because there are different parties that need to work well so that there will be a well-functioning capital market. So how we develop those individual specialists, not just professional or generalists, just specialists, like in the case of stock brokerage, lawyers, auditors, accountants, fund managers, etc. So all this should be developed, obviously. So there is a progress being made in that aspect, and we have an advantage, obviously, because this is a technological era, so you don't have to travel the world to learn a new trade. So you can sit at your home and learn So that's an advantage as a country, but we still have to work on that because it's a determining factor for the success of the capital market. Another point is financial literacy, which personally I don't feel we're financial literate as a nation, so we have to intervene there, we have to work there. Obviously that intervention has to come from different parties, especially the media, because it has a big influence in how it has a big influence on investing behaviors of the citizens. So if you work hand in hand, obviously we can do it, but there are quite a bit of challenges. Obviously it won't be a smooth plain sailing. There will be hiccups, obviously, but how we manage those turbulent moments will be really a critical factor in having a well-functioning capital market.
The World Bank recommends merging African stock markets into a single regional exchange, and this will be a powerful source and driver of capital flows into Africa. And such an exchange will also solve the current problems of illiquidity, small size, and fragmentation. What's your views on that?
I mean, this is an opinion of the World Bank, so economists could agree or disagree on any opinions. So, but I mean, globally there is a tendency of consolidation, consolidating, because the capital market, source of long-term finance, infrastructure, the clearing and settlement, quite a lot of things. When you do these kind of things in a large scale, there is always benefit. It brings, the benefit of economies of scale. So in that regard, if you see, like for example, in Europe, you see consolidation of exchange. One exchange providing services in the UK, in France, Germany, in many markets. But I mean, within Europe, there are quite a lot of exchanges. Although big ones are operating in many countries, there is no single exchange in Europe. Even in America, it's one of the biggest, capital market or stock market. There are quite a lot of exchanges. So it's like exchange business is a business, that is driven by the organizers of the exchange. But when it comes to Africa, I know there is exchange linkage project currently promoted by the African Development Bank and other financial institutions. Where it is now, it is still, trying to link, the African stock exchanges. But for us, in order to integrate with other exchanges, we need to develop our exchange first. So I think for us, the priority should be developing the kind of exchange that would serve the Ethiopian market. So, all these exchanges that you see in Kenya, in South Africa, in Morocco, Egypt, they were designed and developed for that economy. So first, I think for us, the priority should be developing an exchange that is fit for Ethiopia. Then we think about linking this exchange into, because the idea of linking an exchange is promoted by someone, we shouldn't necessarily be on board, because we totally miss all the benefits that we want. Because first we have to create an exchange that would serve the Ethiopian market, and then I think that is the priority for me. Linking is, it's still possible. The argument makes sense, having a consolidated exchange would bring some benefits, but, as we have seen in the, Eurozone project, the bigger economies who are driving the Euro project are benefiting, while the peripheries or many other countries, they are not fully benefiting from the Euro project. So I think there is, for me, the idea is great, but first, we have to develop an Ethiopian exchange that would serve the Ethiopian market, and then second stage, we can see how we gradually integrate. Of course, there is a great deal of benefits with integration. So I'm not completely dismissing integration, but I think priority should be developing the exchange.
And through time, it might come.
Yeah.
Sure, definitely. I think we can understand where that comes from, especially when you look at, for instance, Kenya. The stock market has been there since the 1960s, and there are only about 60-something companies that are listed. And you feel like the market is liquid, but the liquidity is almost by 75% of those companies. 75% of the liquidity is by 3 or 4 companies that are listed in the market. So you can see the problems. So there is a fear, obviously, but as Asafa said earlier, we should have the market in the first place so that we can integrate with others. But you can appreciate the idea.
Dear viewers, this is a conversation with Jonas Stefanos from the private sector and Asaf Asomoro from the National Bank of Ethiopia. We talked on the Ethiopian stock market launching, and we have just raised a lot of issues, opportunities it can bring to the nation's business community and also the national economy. And we also just tried to see the challenges it might face and the preparation is from the government side. Thank you so much for joining me, and see you another time.